Your next losing trade did not start on the chart. It started the night before, when you told yourself just one more video, when you replayed the story of a move you missed, when you scrolled through someone else's profit and loss and promised that you would catch the next one. By the time you sat down today, the market did not need to beat you. You had already set your own trap. This is Mind Over Markets. We do not worship indicators. We train decision makers. I am going to show you why most losses are baked before entry and how to build a routine that makes neutrality your default state. We will map the mental ambushes that ruin trades, the structural traps that punish predictable behavior, and the simple process that returns the edge to you. Stay with me through the end, and you will leave with a one-page neutrality scorecard you can use tomorrow morning. Here is the hard truth. Traders rarely implode because of a single bad entry. They implode because their mind is wired for the wrong game long before the open. Human brains hate uncertainty. We crave pattern and closure. The market offers none of that. It offers probabilities and then demands disciplined action under time pressure. Bring a brain hunting for certainty into a venue that punishes certainty, and you will manufacture evidence, oversize, and justify risk you would never take if you were calm. Meanwhile, the market has its own incentives. It is not a friendly puzzle that hands out opportunities. It is a transaction engine that moves toward liquidity. If you hunt entries where everyone hunts entries, you become the liquidity. If you demand perfect confirmation, you arrive late. If you try to guess the future to feel safe, you end up paying tuition to randomness. You can keep tweaking strategies while your mind leaks edge before you click buy, or you can rebuild your pre-trade process. Top performers do not trust moods. They trust ritual. Neutrality is not a vibe. It is an operating system you build on purpose. Let us call out the inner culprits. These are not character defects. They are normal defaults that must be managed. The first is pre-commitment drift. You start neutral, then you sort of like an idea, then you call it your setup, then you filter all new information through a need to be right. You did not choose bias, you drifted into it. The antidote is simple to write and hard to do. Write the opposite thesis before any entry. State in plain words exactly what would invalidate your idea and what you will do when that happens. The second is confirmation grazing. You skim screenshots and opinions until you see what you want. Every extra piece of feel-good evidence lowers your emotional uncertainty without lowering objective risk. The fix is to define evidence in advance. If it is not on your criteria list, it does not count. The third is emotional carryover. The debt you owe yourself after a miss or a red day. You are not chasing charts, you are chasing relief. The fix is a 90-second ledger clear before the session. Name the emotion, name the trigger, name the behavior you will choose if it shows up again. The fourth is identity fused with fear of missing out. If you value being in the action, the market will reward your presence with activity and punish your account with noise. Trade like a patient sniper. Say it out loud. Then prove it once by skipping the first obvious breakout on purpose. The fifth is comfort addiction. You wait for absolute clarity and it never comes, so you either chase late or do nothing and then panic later. The skill is to work inside the uncomfortable middle. A valid trade is defined risk, defined invalidation, and acceptable uncertainty. If you feel 100% sure, it is already gone. The sixth is state-dependent discipline. You are not undisciplined. You are tired, overstimulated, or underfueled. Your brain is solving the wrong problem, which is reduce tension now instead of execute the plan. The fix is a hard gate. Minimum sleep, a cap on caffeine, a kill switch for distractions. If you cannot pass the gate, you do not trade. Now for the external side. The market environment is an incentive machine. Price moves where transactions cluster, and transactions cluster where expectations cluster. That means obvious levels become magnets. Prior day high and prior day low, round numbers, and widely taught patterns all gather orders like a river gathers debris. Breakouts pull in late traders, harvest their stops, and then reverse. This is not conspiracy. It is structural. Your stop is tradable fuel. If you mark these pools and treat the first touch as caution instead of go, you will already be doing what most will not. Then there is lower time frame noise. 1-minute candles feel like urgent information. They are often just microstructure noise amplified by your heartbeat. Anchor your plan to a higher time frame context and execute on 1 time frame. 2 is manageable. 3 becomes negotiation with yourself. Consider the crowding effect of common analysis. When most retail traders share the same triggers, the first move often clears them out. Look for entries that fade the obvious after a sweep only when your invalidation is tight and the structure supports the idea. Accept the reality of execution disadvantage. You are not going to beat an algorithm to the edge of a wick. Position at the second best price that offers clarity on invalidation. Use smaller size and clearer risk. These traps are not personal, they are systematic. Your job is to notice when your natural urges line up a little too perfectly with everyone else's urges. Let us watch a simple scene. A trader sits down with a plan. Trade only if the daily structure shows momentum and intraday action pulls back to a level mapped before the open. 10 minutes in, price presses the previous day's high. A strong candle closes above the level. Our trader consults social feeds for a few seconds and finds the magic words, "breakout confirmed." She buys. Her stop sits under the breakout candle. The very next minute, price dips by a small handful of ticks, tags her stop, then races higher without her. She blames manipulation. The more useful diagnosis is that she traded the need for certainty. The breakout candle did not meet the pullback criteria. It met her need to feel safe. Her stop sat exactly where everyone else put theirs, so it became attractive liquidity. The loss started before entry when pre-commitment drift rewrote her rules and the obvious level hypnotized her into the crowd timing. The fix is to map the sweep scenario in advance. If price breaks and then quickly flushes and reclaims, that flush is the pullback. Answer on the reclaim, not on the first burst. Another scene. A trader arrives still hot from a red day. He tells himself he will execute the plan. First trade is a small win and he feels relief. Second trade is a small loss and his body remembers yesterday more than the rules. He bumps size to get the day done and takes a mediocre setup. It loses. Now the hidden goal shifts. It is no longer trade the plan. It is erase bad feelings fast. 2 more trades fire without a checklist. The day ends red and the plan goes back on the shelf. This is not a willpower failure. It is unpaid emotional debt. The brain optimizes for mood repair instead of edge. The fix is to write a stop condition into the plan. 2 rule breaks or 1 oversized trade and screens off. That is not punishment. That is protecting the process. Pair this with a 2-minute ledger clear before the open. Name the emotion, name what would trigger it again, and write the neutral action you will take if it appears during the session, like step back, slow breath, reread the checklist. You need an operating system that turns be disciplined into steps. Use the neutral process. Begin by neatening the environment. Use 1 primary screen if you can, and 1 chart per screen. Turn off notifications and silence the news. If your desk demands that you do 10 things, your brain will try. Next, exhale to control state. 2 minutes of box breathing works well. Inhale 4, hold 4, exhale 4, hold 4. Rate your arousal from 1 to 10. If you are above 6, you do not trade yet. State before strategy. Then unbias with a pre-mortem. Write 1 sentence that starts with, "If my idea fails today, it will be because," and finish it with the most likely structural counterargument. Now you are primed to notice it. Set targets and risk boundaries. Define your maximum daily loss, your maximum size, and your maximum number of trades. Sign it if you must. Predefine profit-taking rules so you scale and exit by plan instead of by feeling. Roadmap the structure by marking the obvious highs and lows, round numbers, the session open, and any distance from a common anchor like volume-weighted average price. Label these areas as liquidity pockets so your eyes expect games there. Decide today whether the first touch of those areas is a fade, a pass, or a confirmation only. Write abort conditions that cancel your setup even if the trigger appears. Consider time of day, volatility regime, news windows, and failure to reclaim after a sweep. Abort is not failure. Abort is edge protection. Finally, limit your inputs. Choose one execution time frame and keep a maximum of 3 entry criteria. Close social and chat until you are flat. Too many inputs create synthetic uncertainty. Print this routine and tape it above your screen. It will turn do nothing into a skill you can actually perform. Your pre-session routine can be done in 10 quiet minutes. Reset your state with 2 minutes of breathing and do not proceed if your arousal sits above 6. Clear the ledger in 2 minutes by writing yesterday's emotion, the trigger that caused it, and the neutral action you will take if it returns. Spend 3 minutes mapping structure. Draw the levels, label the liquidity pockets, and set a light bias only if the daily context supports it. Spend 2 minutes committing to 3 criteria at most, 1 for the trigger, 1 for invalidation, and 1 for context. Use the final minute to choose a single fast cancel condition you are likely to face today, such as no trade for a short window after a major news release. 10 minutes of preparation gives you hours of quiet clarity. Skip it, and the market will teach clarity by charging your account. A focused desk is not an aesthetic choice. It is a performance edge. If you keep multiple watch lists, a maze of indicators, and a live news feed blinking in the corner, you are building an anxiety engine. Choose a clean color palette that your eyes can tolerate for long sessions. Choose 1 main instrument or 2 at most. Reduce your monitors to what you actually use. Keep a simple visual timer during trades to prevent nervous scrolling between candles. Put your phone in another room. Arrange your setup so that undesired behaviors are harder and desired behaviors are easy. Give up fantasy goals and adopt probabilistic goals. When someone asks for a monthly target and you tell them you want to multiply your account in a few weeks, you are not planning. You are fantasizing. Probabilistic goals focus on process density and risk posture. For example, aim to take a specific count of valid setups, commit to a maximum daily loss, and fix your risk per trade unless invalidation sits unusually tight. Grade yourself on execution rather than profit. A losing day with perfect adherence earns an A. A winning day with multiple rule breaks earns a D. You do not control outcomes. You control actions under uncertainty. That is what the market rewards over time. Train the observer in you because self-awareness is the meta edge.
Do a pre-mortem before trades so your mind is primed to notice the failure path. Play devil advocate by speaking the opposite case out loud. The brain hears itself and softens attachment. Keep a 1-screen journal that captures only 3 lines after each trade. Write your state on a simple scale. Write why now in a plain sentence. Write what surprised you. Review weekly, not daily. You are hunting for repeated context that produces either strong or weak decisions, like time of day, volatility, sleep quality, or social input. When you find a pattern, change your environment or your rules. Do not try to change your personality. Right before you click, run a short entry check in your head. Ask yourself if this is your plan setup or your mood setup. Note your invalidation and decide if it is tight enough to keep you unemotional. Name the condition that cancels the trade even if your trigger fires. Notice if you are late. If you are late, size down or pass. Decide what gets you flat after your first scale out and make that a rule rather than a feeling. If you cannot answer these questions quickly, you are not entering. You are paying for emotional comfort. There is a seductive time frame trap waiting for anyone who loves precision. The 1-minute chart can feel like a surgeon tool. It is often just a fire hose of stimulation. The solution is not to abandon lower time frames. The solution is to anchor them. Choose a higher time frame context that defines where obvious liquidity pools sit and whether the day is trending or ranging. Then choose one execution time frame that expresses that context cleanly. If you need 5 time frames to justify an entry, you are not refining. You are negotiating with your need to be right. If you love the speed of lower timeframes, keep them, but protect yourself from becoming the liquidity. Do not chase the first breakout. Do not add size unless price reclaims after a sweep.
Do not move your stop unless the structure changes, not because a candle got loud. Let us clear some common objections. I need more confirmation really means I want emotional certainty. Markets do not trade in certainty. They pay for planned risk in the uncomfortable middle. I keep missing moves sounds like a problem. Often it is a healthy sign. Missing is the price of avoiding traps. Track how many misses would have actually been valid by your rules. If the number is low, your rules are fine. If the number is high, your rules are too tight. Adjust on review, not during the session. This is all too complicated is another common refrain. What you do now is complicated. You have dozens of tabs, several gurus, and constant noise. The protocol replaces chaos with ritual. What if they really are manipulating the market is a concern you will hear. Call it incentives and act accordingly. Liquidity sits at predictable places. Plan for the sweep and the reclaim. You do not have to like it in order to trade it. I just need a better strategy is the final refuge. A strategy is a knife. Your state is the hand that holds it. Most cuts happen not because the knife is dull, but because the hand is shaking. Practice the neutral response as a tiny daily rehearsal. Close your eyes and see price racing toward a level you marked. Feel your heart jump and do not click. Wait for the first push, the quick sweep, the reclaim. Breathe slowly and count your breaths. Speak your rule out loud. If it does not reclaim, I do not play. The reclaim finally happens. You size as planned, not as felt. Your invalidation is tight. Your first scale is defined. You are not chasing a feeling. You're running a script. Your nervous system does not learn from lectures. It learns from rehearsal. Give it one scene a day. Identity is the deep layer most traders skip. You are not just building a strategy. You are building a self that strategies can trust. I am the trader who cancels more trades than I take. I am the trader who sets risk first. I am the trader who can watch a move without needing to participate. Speak one statement, then prove it once during the session. Each pass on an obvious but unplanned trade lays a brick in the new identity. Stack bricks. Do not look for a castle on the first day. Tie identity to ritual instead of outcome. Ritual is reliable. Outcome is not. The market cannot stop you from breathing, journaling, and mapping structure. Build on the parts the market cannot touch. Make your weekly review short and useful. Skip the long novel. Use 2 simple pages. On the first, write your 3 biggest wins and your 3 biggest errors, and then commit to one environment change for the next week. Change the desk, the inputs, or the sleep window. On the second page, paste or redraw 2 charts, one where you followed rules and one where you did not. For each, write the state you were in and the decision you wish you had made. Circle the exact moment where you lost neutrality. That is your training target for next week. If your review does not lead to a change in the environment or the rules, it is entertainment. Edits to the self beat edits to the chart. Neutral does not mean numb. It feels like alertness without urgency. It sounds like I see a possibility instead of I need this to work. You will still feel adrenaline. You will still want to chase. Neutrality does not delete emotion. It anchors it. Your breath becomes a metronome. Your checklist becomes the parent that says, not yet. Your plan becomes the home base you return to after curiosity goes for a walk. If you try to eliminate all feeling, you will just suppress until you burst. Let feelings sweep across like windshield wipers. The road you follow is the plan. Here is how a practical morning might unfold. You wake and decide that if you slept less than a reasonable amount, you will not trade. Today, you pass the check. You keep coffee to 1 cup. You run the neutral protocol on paper and spend 2 minutes on breathing. Your arousal comes in at 5 out of 10, which is acceptable. You clear the emotional ledger by writing that yesterday you felt frustration after a late entry, which was triggered by a screenshot on social media. You write that if it appears again, you will mute social and wait for a reclaim. You map structure by marking the previous day's high and low, the session open, and two nearby round numbers. You label these as liquidity pockets. You hold a light bias that only matters after a reclaim. You commit to 3 criteria for entry. You will wait for a sweep and reclaim of the high on your chosen time frame. Your invalidation will be below the reclaim wick. You will scale at a set multiple of risk and then trail to structure. You pick an abort rule that says no trade in the first part of the session if initial momentum is vertical. Price surges early and you do not chase. It sweeps the prior high and rejects. Minutes later, it reclaims. You see the plan unfold because you plan to see it. You size reasonably, set the stop, scale out as promised, and exit when the structure changes rather than when your feelings spike. That is what it means to win the trade before the trade. Watch for a common pitfall. You enter clean and then move the goalposts mid-trade. You widen the stop. You dream of letting it run forever. You add size because it feels right. Those are not strategy decisions. Those are attempts to manage your state by other means. The fix is simple and ruthless. If you change anything, you must write why, and the reason must be structural. The market did something that your rules recognize, therefore you are allowed to make the change. Feelings do not qualify. Keep a small note that says, if it is not written, it did not happen. Track fewer things and do it consistently so you actually improve. Track sleep quality. Track your arousal at the open. Track how many trades you aborted on purpose. Track how many trades were compliant with the plan. Track rule breaks. That is 5 numbers. Watch how your profit and loss responds to process changes rather than the other way around. If your process metrics improve while your profit lags, show patience. If your profit spikes while your process degrades, you are surfing variance rather than building edge. I want to give you a 7-day challenge that builds the habit quickly. For the next week, trade smaller than usual. Make process your only scoreboard. Complete the neutral protocol each day. Obey the abort rule at least once when the conditions are met. Skip one obvious but unplanned trade per session. At the end of 7 days, rate your sessions for neutrality and pick one environment change to implement. Only then consider returning to normal size. You are training skill, not playing account heroics. Here is the close. Most traders try to outthink uncertainty. Professionals build a life and a routine that run uncertainty. That is the heart of mind over markets. Your edge is the way you think before you trade. If this resonated, download the Neutrality Scorecard and tape it to your desk. Tell me in the comments which pre-trade trap hits you hardest. Confirmation grazing, emotional carryover, or comfort addiction. I read them and I use them to shape future episodes. Subscribe if you want more sessions that help you win the trade before the trade. Next time, we will break down liquidity sweeps versus confirmation and how to stop being the stop.